Investors, we are coming off of quite a week after our latest inflationary reading, earnings season that has officially kicked off, and loads of the wealthy elite who are offloading shares of their stocks. But more on all of that to come. If you're new here, I'm Ari, your go-to dividend investor here on YouTube, looking to deliver through on economic insights and share weekly dividend stock ideas with all dividend investors out there, to which today I have 5 monthly dividend stocks to consider given our economic environment. And with all of that said, how about we dive right in? So let's just start with a quick account update on a personal front, with my Vanguard account sitting at $123,082.33, which is where I was just before Jerome Powell and the Federal Reserve surprised us all with their hawkish remarks following the last FOMC meeting, where we heard firsthand from Powell himself that more interest rate hikes are coming our way. Now, let's for a moment just understand why we're all seeing this current run-up as momentum continues to build, and unpack it so we're not thrown off guard when we actually see a sell-off in the coming days. Now, in my opinion, a lot of this recent excitement is solely from inflation having notched down from 4% to 3% as per our latest Consumer Price Index report, which is great news and a definite sign that we're ultimately heading in the right direction after a prolonged period of sky-high inflation. However, we do have to keep in mind that this is a war that's far from over, though many battles have already been won, and most importantly, the real focus now is becoming interest rates that will likely be much higher than anticipated for a longer period of time, which will ultimately impact businesses and of course all of us as consumers. Now, it's also earnings season, which always has a tendency to excite investors. But I'm here to warn you that even if earnings come in better than expected, earnings are, well, merely a reflection of a business's past performance, and therefore the future, what really matters, what remains an unknown in the uncertain economic environment that we're soon going to find ourselves in at the end of the year. And last but not least here, take note of any and all signs that you can, like what smart money is doing, along with corporate insiders, because as of late, they are prepping for something and selling right out of their holdings. Have a look.
A growing cohort of billionaires and CEOs are unloading stock, and at an increasing pace after little activity last year. Our Robert Frank's been tracking that action and joins us with some numbers. Important dynamic to watch, Robert.
Yeah, Carl, very important for investors. The first half rally giving shareholders a chance to cash in some of their chips. America's top billionaires selling over $9 billion worth of stock just this year. Topping the list is the Walton family, selling $4.5 billion worth of Walmart shares. Now, most of the biggest sales are in tech. Joe Gebbia, the billionaire co-founder of Airbnb, cashing in nearly $900 million worth of shares. Those are up over 50% this year. Oracle stock is up 35% this year. That's made Larry Ellison $38 billion richer, and he's got a little bit more spending money, selling $848 million worth of stock as part of his options exercises. Oracle CEO Safra Catz also selling $470 million, also with her options exercises. Salesforce CEO Mark Benioff, the CEO of Palo Alto Networks, and 3 board members of NVIDIA, also big sellers. Moderna CEO Stéphane Bancel selling over $300 million of stock in the first half. That's after unloading about $400 million last year. And finally, Josh Harris selling about $210 million worth of Apollo stock. That's going to help pay for the Washington Commanders with that $6.5 billion price tag. You look at insider buying, that is now running about half of last year's level.
So as for me, well, although I'm not selling out of my positions because of the nature of my investment strategy, I am certainly more focused and doubling down on companies that will ultimately be able to withstand economic downturns and of course all the hardships, and moreover just continue to pay me handsomely while I wait for more certain days, which all leads me now to the first monthly paying dividend stock today. It's none other than Agree Realty, ticker symbol ADC, which is a real estate investment trust that's focused on the ownership, development, acquisition, and management of retail properties that are net leased to national tenants. And now, speaking about Agree Realty's tenants, they range from AutoZone to Costco and anything in between. And ultimately, Agree Realty has just been flourishing since its founding over 23 years ago, with a total of 1,908 properties, amounting to roughly 40 million square feet worth of leasable space in 48 states. But given our economic climate, of course, for a real estate investment trust dealing in retail space, it's seen better days. And we actually get its share price now down 6% on the year, trading for $65.15 per share. However, this is also exactly why there's an opportunity with Agree Realty, because remaining forward thinking come an economic turnaround once interest rates actually come back down, businesses will be looking to expand, and therefore upside is predicted. Roughly 14.6% worth of it by analysts, coming up to a share price of $74.67 per share. Not to mention, we have been seeing a whole heck of a lot of insider trading into Agree, with plenty of insiders from the C-suite executives to the director level scoring more shares, all while hedge funds seize every single opportunity they can to invest in Agree Realty. And until the rebound, shareholders of Agree Realty will ultimately be enjoying their dividend coming in at 4.38%. Now, before we get to this next monthly paying real estate investment trust, do me a favor here and letting me know that this content is of value to you by simply tapping on that thumbs up button. And if you want to do us both a favor here, be sure to subscribe to the channel while you're at it. But now let's get back to our next dividend stock here and talk about a personal favorite of mine. It's Realty Income, ticker symbol O, which, as I'm sure you already know, is the biggest net lease solutions REIT in the entire industry. Now, if you're not familiar with this term, net lease, it essentially means that the owner and managing agent are not responsible for many, if not any, of the fees or costs associated with the property, as they're all then passed on to the tenants. So not too bad of a deal here for Realty Income. Now, in terms of their properties, we are talking about roughly 12,400 in total, spanning across 50 states and even internationally, with a presence in the United Kingdom and Spain, along with 1,259 clients to lease them all out to, allowing for their 99% occupancy rating. But yet, here we are with another dividend powerhouse, down on the year by about 4%, trading for $60.17 per share, which I would say is not necessarily undervalued, and I'd wait until it drops into the 50s, but it's getting closer to a nice strike price. Although that hasn't stopped hedge funds from actually moving in on this position, and analysts who also remain very optimistic when it comes to Realty Income, with nearly 16% worth of upside forecasted as that share price climbs to $69.75 per share. And until it does exactly that, we have a beautiful dividend yield coming in here over 5% at 5.08%. As for dividend stock number 3, we're gonna buck out of the real estate space and just for a hot second talk about Main Street Capital, ticker symbol MAIN, which is a business development company focused on providing customized debt and equity solutions for lower and middle market companies, in which Main Street Capital's portfolio investments are really made to support anything from management buyouts to recaps and refinancing. Now, given our current economic environment, with plenty of handouts and help needed from entrepreneurs and small businesses that are trying to scale, Main Street has been performing quite well on the year, already up by over 15.3% year to date, trading for $40.49, that PE ratio coming in at 12.1, with about 11.11% worth of upside expected from top analysts, bringing the share price up to $45 per share. Now, as the macro environment changes, we could get some fluctuations with Main Street Capital's share price, but overall a solid investment to hold on to, especially with this dividend of theirs coming in at 6.58%. Next up, we're gonna head back into the real estate industry with another REIT. We have LTC Properties, ticker symbol LTC, which is engaged directly in the management of senior citizen housing and healthcare properties. So go figure, no shortage of a need here with the aging process that isn't stopping for any of us anytime soon. However, when it comes to LTC Properties property count, we have 218 total, breaking down to 135 assisted living facilities and 76 skilled nursing facilities. And now throughout the last few years, LTC was a very safe bet for many investors, whereas we're now seeing shareholders selling out, meaning opportunity is coming our way, with the share price having slid to just $34 per share year to date. But we also see many retail investors pouring money back into LTC because of the uncertain future that lies ahead. So it would be wise to keep a REIT like LTC Properties on your watch list, especially given its dividend yield is coming in at a whopping 6.87%. And now, last but not least, we have EPR Properties, ticker symbol EPR, which is a newer find yet a gem of an investment as it's engaged in the development, financing, and leasing of family entertainment and childhood learning centers, with a portfolio totaling 363 properties leased by over 200 clients in and outside the United States, with their properties ranging from movie theaters to eat and play attractions, water and ski resorts to gyms and schools. EPR has it all. And as the world has been trying to get back out and about to normalize for a long time now, EPR has been a great benefactor, as we can see its performance is in the green, up on the year by over 30%, trading for $46.19 per share. Now, analysts still foresee more upside on the way, about 12% worth of it, coming up to a share price of $51.86 per share. Now, we must keep in mind that with interest rates rising, it's not going to be so pretty for EPR properties. However, over the longer span of time, which is what we as dividend investors are always thinking about, EPR is likely to remain a solid investment, especially with a dividend yield coming in at, check this out, 7.11%. And there you have it, investors, 5 monthly paying dividend stocks to enjoy some serious passive income with. Now, let me know your thoughts on any or all of these dividend stocks by dropping a comment down below. Most importantly here, as we close out, is tapping on that thumbs up button, subscribing to the channel, and never missing a single video by simply clicking this one right here.